Laughter, it's a great medicine. I hope you making lots of time to laugh and have fun. We're getting to the end of this course and there are a few more things we need to do. Today I'm going to do the creditor's ledger and the creditor's control account in the general ledger. What we're looking at here is Calibu Education has a supplier, the computer store, and we are going to buy from the computer store on credit. We're going to look at a whole lot of transactions between Calibu Education and the computer store. Once again, we're going to record those transactions. I'll show you the entries in the journals, and then I'm going to do the creditor's control account in the general ledger, which is done on a monthly basis. Then we're going to look at the account of the school in the books of Calibu Education, and we're going to look then in the creditor's ledger, and we're going to do the account of the school. Remember, all transactions are documented, so I'll quickly have a look at some documents that are used to record transactions with the computer store. So I look forward to going through this video with you, and I hope you enjoy it. And hopefully we have a few laughs along the way. So, like I always do, I'm just going to show you how this fits into the bigger picture. We are going to be doing the creditor's ledger. The transactions are posted on a daily basis to keep a running balance in the account of the computer store. That's the account we're going to do. We buy from them on credit, which means we get the goods now and we pay at a later date. We've been given that credit facility, and we're going to look at specifically the creditor's journal, the creditor's allowance journal. Remember, the creditor's journal is to record transactions where we purchase on credit. I'll just briefly show you some source documents, and remember, we're looking at what we do on a monthly basis. And specifically in this video, like I mentioned, we're going to do the creditor's control account in the general ledger. It's posted to on a monthly basis, and we're going to look at the individual account of the computer store in the creditor's ledger. And because we only have one creditor at the moment, one supplier that supplies to us on credit, the balance of the control account should equal the balance of the account of the computer store in the creditor's ledger. That would be a creditor's reconciliation, finding the differences between the control account and the list of creditors in the creditor's ledger. More about that as we go on. In this video, I'm not comparing the statement from the creditor with our books. That is for the next short learning program for another video. But yeah, we're just looking at the control account in the general ledger and the creditor's ledger. Remember, we've done all that theory. We've done value-added tax. We've looked at the accounting rules, which I will show you when we do transactions now with the supplier. We've done a whole lot of calculations, and I have done a video on understanding the relationship between us, Calibre Education, and our creditors. So once again, if you watched the debtors control reconciliation, the debtors reconciliation, a similar steps to follow. The first thing I'm going to do is what's on the right hand side here. We are looking at the relationship between Calibre Education and our supplier, the computer store. We're going to look at all the transactions relating to the computer store. For February, we're going to post to the journals, and on a daily basis, we're going to post to the creditors ledger, specifically the account of the computer store. Once we've finished that, we will look at the control account, and we will balance the control account in the general ledger, taking the information from the journals. So let's move on. We're going to do, first of all, the account of the computer store in the creditors ledger. This is just an illustration of where we're going. We're going to do the control account in the general ledger, but first we are going to do the account of the computer store in the creditors ledger of Calibre Education. All the transactions relating to the computer store are going to be taken on a daily basis into this account of the computer store, and we will keep a running balance. Every day the balance, or after every transaction, the balance will change of what we owe the computer store. These are the transactions I use in this course. What I've done is I've taken out all the transactions that relate to the computer store. There we go. We're dealing and we're buying on credit from the computer store. By the way, when we buy on credit, that results in a liability. Remember, I'm going to apply the rules all the time. So the computer store is a current liability in the books of Calibre Education, because Calibre Education will owe the computer store money until that outstanding debt is settled. These are the transactions between Calibre Education and the computer store. We are going to go through each one individually, so don't stress. Remember, every single transaction is recorded on a document. Here, just as an example to refresh your memories, we've done documents, but here is a document from the computer store to us, Calibre Education, for tablets and software. And there's the amount of the invoice. So purchase stock on credit from the computer store, received a 5% trade discount. Remember, trade discount is not recorded. We're going to record the amount less the trade discount. But this slide here is just to show you and refresh your memories what an invoice looks like that we receive from the computer store. This is a credit invoice, and we are going to record that invoice. Remember, when we make a purchase on credit, it will get recorded in the creditor's journal. This here is a credit note. For example, we returned stock to the computer store that we weren't happy with, and we received a credit. They accepted our claim for goods which did not comply with the order. By the way, we would have sent them a debit note, which is a claim for goods which did not comply with the order. Then when they accepted the claim, they would send us a credit note saying that in their books they're going to credit our account because there's the reason: we sent back stock of inferior quality to the computer store. So they send us a credit note, we receive the original, and we use this document to record the information in our books. And our books, remember, we're Caliboo Education. So there's an example of a credit note. When we pay in cash the computer store, they issue us with a receipt. We use this document to record the transaction. Journal voucher: if we receive settlement discount, we record the information in the general journal. So first of all, we need to document the transaction, and we record it on a journal voucher. I'm going to go through every single transaction, remember, in the account of the computer store. Just showing you the documents that are used to record these transactions. Okay, these are the transactions. I'm going to go through each one as I have mentioned. So let's get going with the main purpose of the video. I'm going to now do the computer store account in the creditor's ledger. If you hear that aeroplane, I'm working from an airport. Just kidding. The plane is flying over my office, but I'm going so nicely, I'm not going to pause the video. This is real. Let's move on. So on the 6th of February, we, Caliboo Education, purchased stock on credit from the computer store. We received 5% discount. Before the trade discount, the invoice amount was $79,000. Now when we make a purchase on credit, it gets recorded in the creditor's journal. The document number was CS21. The day was the 6th. Who is the creditor? The computer store. What is the folio of the computer store? C1. I picked that up from the creditor's ledger. The computer store was Caliboo Education's first supplier. C1. Creditor 1. The amount that goes under creditor's control, which is going to be taken to the creditor's control account in the general ledger later, is $79,000 less the 5% discount that was given because of the bulk purchase, so trade discount. And the amount after the trade discount is recorded. You can check on your calculator. It's $75,050. I'm not too concerned here with the input VAT and the trading inventory, because remember the purpose of this video is to do the account of the computer store in the creditor's ledger. But just a little bit of revision: in order to calculate the input VAT, because this is a standard rated item, stock, we say 75,050 multiplied by 15/115, the VAT fraction. We can claim input VAT 9789 and 13 cents. And the actual cost price of the stock was the invoice amount less the input VAT. Or we could take the invoice amount divided by 1.15, and that gives us 65,260. But the purpose of this video is to do the account of the computer store. So this information gets taken to the account in the creditors ledger of the computer store on a daily basis. So on the 6th, remember, code 01 is an internal code used by Caribou Education for credit. So 01 indicates a credit transaction, and the codes would normally be given to you, or you could assign your own codes within your own organization for credit. Most textbooks use 01 for credit. Invoice and the invoice number. Where was the information obtained from? Creditor's journal, number 1. Now, very important, we owe the computer store more. I mentioned the computer store fits the definition of a current liability. An increase in liabilities at the bottom of the slide, the account must get credited according to the rules. There's my error. Increase in liabilities, credit 75,050, and the balance is 75,050. So at the 6th of February, after the 6th of February, we owe the computer store 75,050. On the 8th of February, we return stock of inferior quality to the computer store. They accepted our claim for goods which did not comply with the order. We actually sent them a debit note saying that we're not happy with certain stock that was sold to us on the 6th. They sent us a credit note to the value of 12,000, saying that they are going to credit our account with 12,000. Now, if we return stock to a supplier, what will happen is it will be a decrease in liabilities, but more about that soon. We record that type of transaction in a creditor's allowance journal. The amount was 12,000. Remember, under creditor's control, the amount is recorded with the VAT. Now, because we got a credit here, we can no longer claim the input VAT on the original transaction. So it is reversed by putting this in a column for output VAT, and obviously the value of our stock has decreased. But we're concerned about the creditor. So if we take this information to the creditor's ledger, we've given a code 03 for creditors' allowances. The document that we received was a credit note, and I saw the document, it was number 14. Where is this information recorded? In a specific journal, the creditors' allowance journal. The account, the computer store account in our books was debited with the full amount, including the VAT, 12,000. It was debited because of this rule. What we owe the computer store has decreased, and a decrease in liabilities, the rule says debit. So we debit the account of the computer store, and what will happen is, that's a minus sign. If it is in the debit column, this balance will decrease because we owe the computer store less after they've given us this credit In our books it will be a debit. You can go and watch that video on the relationship between Calibre Education, a debtor and a creditor. It will explain how transactions are recorded in the books of the computer store and how transactions are recorded in the books that we're recording, Calibre Education. Remember, we're always looking at this from the point of view at the moment of Calibre Education. That's our book. That's our business. So the account is debited in our books, decrease in liabilities, and we owe less. So the balance has gone from 75,050 minus 12,000, and the balance owing on the 8th after this credit to the computer store is 63,050. Then on the 17th, we made a payment to the computer store to settle the amount owed to them. That means the balance must end up as 0. We received a 5% settlement discount, and the settlement discount will be recorded in the general journal. So a journal voucher was used to record the discount. But the first thing we need to do is we need to make the payment. It was an EFT, so on the document we've got EFT, and normally you would have, let's say for example, a statement from the computer store. So you make an EFT on an invoice or a statement. It must be attached to the electronic funds transfer payment. That was on the 17th. Who did we pay? The computer store. How much did we pay? We check what was owed by looking at the account of the computer store, 63,050. But we were given a 5% discount. And how we calculate that is 63,050 minus 5. And that gives us 59,897.50. And under the creditors control column in the cash book payments, there's the amount. So that came out of our bank account, and this here needs to go to the control account in the general ledger. But first, on a daily basis, we're doing the transactions relating to the computer store. They sent us a receipt as proof of payment. This information was recorded in the cash book payments. The account was debited. Why? Because there was a decrease in liabilities, and the rule says decrease in liabilities debit, and the amount is what was outstanding, 63,050 less 5% is 59,897.50. And that gives us a balance of 3,152.50. But the transaction says the account was settled, so the balance needs to be 0. But we haven't yet recorded the settlement discount. And according to this transaction, well, settlement discount is recorded in the general journal. So we need to draw up a journal voucher for that and process this transaction in the general journal. So here it is. This is an extract from the general journal. Creditors control and the computer store were debited with 3,152.50. Don't worry about the VAT and the trading inventory. We are only doing the account of the computer store in this video. So code for settlement discount, Calibre Education made it 04 and most textbooks. There's the document number. Where did we get the information from? The general journal. the account was debited 3152 and 50 cents. That resulted in a balance of 0. So now Calibu Education has settled the account of the computer store to date. So after the 17th, the balance owing to the computer store is 0 in our books, which is correct. Remember, when a creditor is debited, it's a decrease in what we owe, a decrease in liability. When the account is credited, it's an increase in liability, and the balance will increase. So what's happening is, in the debit column, in this case here, it's decreasing the balance, and the credit column is increasing the balance. But I don't like to learn it like that. I like to learn it by first applying the rules. Don't just assume in the debit column it's a minus, in the credit column it's a plus. Apply the rules. A decrease in liabilities, because then now you understand. A decrease in liability means a decrease in what is owed to the computer store. And an increase in liabilities is you owe the computer store more. But we carry on transacting with the computer store, and once again on the 18th we use that credit facility, and a new printer was purchased from the computer store. Received their invoice CS78 for 1350. Now when we make a purchase, this here is on the 18th, it gets recorded in the creditors journal. The amount was 1350. Now that needs to go to the individual account in the creditors ledger on a daily basis. We owe more. Increase in liability, credit. There's the rule. We now owe 1350 on this account. So there's a credit purchase. We record the document number. We can record their document number, or we can create new numbers for credit purchases. But the software these days is so good, you could just type in their invoice number, which I have done here, CS78, and the information gets posted to the computer store's account on a daily basis. So now we owe them 1350. On the 20th, we purchased tablets on credit from the computer store. 3 were for resale and 1 was for office use, but we purchased 4. It's 4,400. It's a credit purchase. It goes in the creditors journal. There's the document number. Who did we purchase from? The computer store. What is the folio reference of the computer store? C1. Under creditors control, 4,400. Okay, let me just revise this. 1 was for office use, so it was equipment. The other 3 were for resale, so it's trading inventory. But we're only concerned in this video with the creditors control column. So on a daily basis, it's posted to the computer store account. 01 for credit. There's the document number, invoice CS82. Where did we get the information? From the creditors journal. Increase in liabilities, rule says credit. And now the balance has increased from 1350 plus the credit purchase of 4,400. It's now 5750. So on the 20th, that's what we owe the computer store. On the 23rd, bought a smart screen from the computer store for presentations, 10,520. paid a 2,000 deposit. Listen carefully. That 2,000 was cash. It does not go into the creditor's journal. We only want to know the amount of the credit purchase. So it is at the bottom of the slide, 10,520 was the price including VAT. Remember, all transactions include VAT unless otherwise stated. So 10,520 minus the deposit of 2,000. So what was the value that we purchased on credit? 8,520. So what gets recorded in the creditor's journal? 8,520. And there it is in the credit column, 8,520. And how did I get that? As I explained, the purchase price minus the deposit. And your balance now goes from 5,750 plus the 8,520. We owe the computer store on the 23rd 14,270. Also on the 23rd, the computer store gave us a credit of 50% on one of the tablets purchased on the 20th. So on the 20th, we purchased 4 tablets. 4 tablets cost us 4,400. So we got a 50% credit on one of the tablets. And if you divide that by 4, you get 1,100 for one tablet. We got a credit of 50% on one of the tablets. So the credit is 50% of, which is multiplied by 1,100. The amount of the credit, and a credit goes into the creditor's allowance journal, is 550. There's the document number, the day, the creditor's folio reference. The amount of the credit is 550. Now it's a credit in their books, but for us it's a decrease in liabilities. A decrease in liabilities, we debit according to the rules. You see, it can get confusing because they're giving us a credit. Now you might ask yourself, why does it go in the debit column? Because according to the rules, a decrease in liabilities in our books, it goes in the debit column, and the amount is 550. So now the balance goes from 4,270 minus 550 is 13,720. On the 23rd, that's what we owe the computer store. On the 24th, it was discovered that we at Calibre Education were overcharged for the smart screen. The computer store gave us a credit for 1,000. It needs to go into the creditor's allowance journal. There's the 1,000. On the 24th, the code for the allowances is 03. We received a credit note from the computer store, CS25. The information was recorded in the creditor's allowance journal. We owe them less, a decrease in liabilities. The account must get debited. 1,000 debited in our books, credited in their books. And the amount outstanding, or the amount that we owe the computer store on the 24th, is 12,720. Remember, when we get a credit from the computer store, it goes into the creditor's allowance journal. And what do? In our books, we debit the computer store's account, decrease in what we owe to them, decrease in liabilities. On the 25th, we issued a check to the computer store, the amount owing on our account. There we go, 12,720 we owed the computer store, and now we're settling that amount. Issued a check. These days you'd most probably make an EFT payment, but let's go with the check. So the check was issued. We used the check stub or check counterfoil to record the transaction. Who did we pay? The computer store. What was the amount? 12,720, and under creditors control 12,720. That gets taken to the computer store account in the creditors ledger of Calibre Education. The document was the check counterfoil, debit 12720, and guess what? The balance is 0. We no longer owe the computer store anything. Thought I'd include that. Sunrise. We've been doing accounting from sunrise to sunset through this course. I hope you have thoroughly enjoyed increasing your knowledge. And this is just a picture of the computer store account on its own, all the transactions. So the debit column, let's start with the credit column. This is in our books, the books of Calibre Education. We're looking at the account of the computer store. An increase in liabilities, the account will get credited, which means the balance will get bigger. If we make payments or get allowances from the creditor, we will owe less, a decrease in liabilities, and that will result in the balance getting smaller. There we go. I hope you understand that well. Now what we've done is this right hand side. We've done the account of the computer store in the creditors ledger. Now what happens as well, there's a general ledger, and the general ledger has the account, that account of creditors control in the general ledger. And the creditors control account is a summary of all the individual creditors, accounts payable. And hopefully, once we balance this creditors control account, it will equal the list of creditors in the creditors ledger. The control account is a summary of all the individual creditors, accounts payable. So if we have done everything correctly, accurately, the control account will balance the total list of all the individual creditors. Now in this exercise, in this video, Calibre Education has only got one account with the computer store, and we have just seen that the balance at the end of February owing to the computer store ended up as 0. So now when we balance this control account, and we've taken all the transactions at the end of the month to the control account, the balance of the control account should be 0. We did see that at the beginning of the video. So once again, I'm taking all these transactions relating to the computer store. This is what we're going to do now. the general ledger and we're doing the creditors control account. So I've taken extracts from all the journals. I'm going to keep this in date order. So in the general journal on the 17th, remember, we were given settlement discount of 3152. That gets taken to the control account, and the control account is debited. On the 17th, those were the contra accounts. Where did the information come from? The general journal, and the amount was 3152. I'm keeping this in date order. Remember from our journal videos, if an item has its own column, the total at the end of the month is posted. But yeah, we are actually taking the information on the 17th because the control account does not have its own column in the general journal. So there's the transaction taken to the creditors control. That was a decrease in liabilities. Then we are going to take all the credit purchases. At the end of the month, I take the total and I take it to the control account. Now, because we made all these credit purchases, we owe, after this month, 89,320. We can't write everything we purchased, so we call it sundry purchase. Where did that information come from? The creditors journal. What was the amount? 89,320. So we've posted the total in the creditors control column at the end of February to the control account in the general ledger. And the balance of the control account is going to equal the list of the creditors. Why did we credit this creditors control account? Because it was an increase in liabilities. I'm applying my rules. They're the rules. Now we also returned items and were given rebates, or we were overcharged on certain items. So the allowances for the month of February was 13,550. That there is a decrease in liabilities, so it will go on the debit side in the control account in the general ledger. Where did we get the information from? The creditors allowance journal. And I applied that rule. Decrease in liabilities, debit. The information has been posted from the creditors control column to the creditors control account in the general ledger of Calibre Education. So what we're doing is we're doing all the transactions, or a summary of the transactions, and at the end of the month we're posting it to the control account in the general ledger. All these transactions were posted to the creditors ledger on a daily basis. This year we're just doing on a monthly basis. Then we made payments to the computer store, and now we post this information. It's a decrease in liabilities when we make a payment, so there it is debited 72617 total. And this here is what the general ledger account looks like after all the transactions have been posted. There's the creditors control account, balance sheet account number 12, and if I add up the credit side and I subtract the debit side, guess what? We get 0. So the balance carried down on the smaller side, well, they were equal, is 0. We total up both sides, and on the 1st of March, according to our books, what do we owe our creditors? Nothing. 0. and we can celebrate. The control account equals the list. There the balance of the computer store was 0. If we add up all our creditors, accounts payable, the total owed is 0 because we only had one, the computer store. And guess what? Our control account, which is a summary of all the individual accounts, is equal to 0. So the control account reconciles with the list of creditors. And according to this, we have accurately recorded the transactions with our suppliers in the creditors control account and in the creditors ledger. It's a checking mechanism, this. Remember, in our next short learning program, I will do a different creditors reconciliation where we receive a statement from our creditor and we check it with our books. Just before we pay them, we need to make a check that what they've charged us is actually correct. That's also called the creditors reconciliation. But in this video, I've just introduced the creditors ledger, an individual account in the creditors ledger, and the creditors control account in the general ledger. I hope you once again enjoyed that. I've enjoyed making this video, and soon you will be writing an exam where I know you're going to do well, and your knowledge hopefully has increased tremendously from the start of this course. Well done. Best of luck for your assessment and your exam.